This video content has been made available for informational and educational purposes only. For anything specific to your needs or circumstances, please get in contact with us directly. G'day everyone, it's Heath from You&Me Personalised Property Services here with Matt from Capita Finance. Thanks for joining us.
Thanks, Heath.
Lovely. And we're here getting chatty with Maddie, and we'll go straight into it. We'll talk about the elephant in the room, the interest rate rise yesterday when they met. So can you just get straight into it? Let us know what happened and what that means in real terms on, say, a $500,000 mortgage.
Yeah, so looking at consumers' pockets specifically, we're looking at about a $70 increase at the end of each month on a $500,000 loan.
Cool.
Yeah.
Lovely. So obviously the cash rate went up 0.25%. So you'll be paying an extra $70 per month on your already increased mortgages on a $500,000 mortgage.
Correct. Yeah.
Cool. Now obviously on $1 million, we double that to $140 a month, and a $1.5 million mortgage, we're tripling that to $210 extra per month.
Yeah.
Cool. Now let's get back to April, where we started to see the terrors. And what does that mean in real terms? What does it increase by, and what does that mean in your pocket for a $500,000 mortgage?
Yeah, so that's probably where we're seeing the biggest movement. So you're going from about a 2.5% rate to near on a 4.5% rate.
Yep.
So if you were to sort of look at the differences between then and now on your $500,000 property, you're looking at about a $400 a month increase.
Yeah, that's crazy. So you know, when you were paying $500 a month before, you're now paying $900 or thereabout, you know, whatever it may be. So again, if we double that for our eastern staters, you know, Melbourne and Sydney at 1 million and 1.5 average prices, you're looking at an $800 a month increase and a $1,200 a month increase.
Yeah.
Cool. So quite a huge, dramatic increase in such a short time. But there is, I guess, light at the end of the tunnel. We talk about equity, and you know, we've seen Sydney, Melbourne, Canberra drop pretty sharply over the last couple of months. Now, what can they do with their, because they did grow over the last 2 years, you know, $200,000, $300,000, $400,000. And now people are wondering, what can I do with, although it's dropped, we're still a major advantage here. How can I take my money out and spend it somewhere else?
Absolutely. So we're doing a lot of refinance, a lot of accessing equity. The biggest advantage we have is a large capital rise, as you said. So people over East especially have experienced 20, 30, up to 45% growth in some areas.
Yeah, you know, and you're talking $1 million at 30, 40%.
Correct. So you've got $300,000-$400,000 extra equity that you didn't have before. If you already started on an 80% loan to value ratio, so 80% of the value of your home is borrowed funds, then you've got an extra $300,000-$400,000 to actually pull out and use to invest elsewhere. Yep.
And hint, guys, Perth market hasn't gone backwards like the rest of the country, excluding Adelaide, of course. So, you know, $300,000 to $400,000 equity, pull it out, put it to somewhere where it's still a rising, growing market, and something that is in Perth, an average still of $630,000 thereabouts for an average property.
Yeah, so you're almost looking at 50% of the property covered, and you've got very high rental yields as it is. So high rental yields here, high capital growth over East. What we can do is get free property valuations done.
Join it together.
That's right. And that's actually valid for 6 months. So what you can do is have someone walk through your house from the bank, value it via a walkthrough, and that's valid for a 6-month period. So if you find a decline in valuations, in the value of your home over that 6-month period over East, you're able to still access the valuation
Initial
as
valuation.
of today. Yeah, that's right.
Yeah.
So, whereas over here, if prices are impacted, you're able to then get a cheaper house, accessing more of the equity in your own home.
Yeah, cool. And we always talk about rental yield, and we've spoken about in numerous videos that Perth or WA has the highest rental yield in Australia at 4.4%. But at You&Me Personalised Property Services, we're quite regularly and consistently getting 5 to 6.5%. So, and generally, you know, our hot spot is at that $450,000 to $550,000. So you pull out your equity from Sydney, Melbourne, Canberra, put it into Perth, have a rental yield that's already paying your mortgage off, and you're home and hosed.
There you go.
Lovely. So guys, if you want to know anything at all about rental yield, capital growth, or pulling your money out of your eastern states equity and putting it into Perth, come and see us, Matt from Capita Finance. And until next time, happy investing.